Morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, March 10th. We got a couple economic news releases to go over today, and we'll start off with the NFIB Small Business Index. This is index had a little bit of improvement, as you can see. There's really no gains or huge change fluctuations in here, but in today's data, as you can see here. But the previous reporting back in January was 97.9, and it just jumped up 0.1% to 98 for the month of February. Job openings. Job openings for the month of January. Again, not a big jump or anything, but December we had a 4.9 million job openings, and it jumped up to 5 million basically in January. And then last but not least, we got the wholesale inventories for the month of January. So we had 0% back in December, and it jumped up to 3.3%. So wholesale inventories is basically, you can see the reason why that jumped up is primarily because if you remember, the sales back in December wasn't so good. So basically, it's just leftover inventory that people didn't buy that just got stayed there. So it's not like they're stocking up for growth. It's more we're not seeing a whole lot of difference of where things are at. So in this case, people didn't buy it. The business weren't able to sell it, so they just have it kind of stocked over again. NFIB small business is basically really no change. It's the confidence level in the small businesses out there. So they're basically, their confidence level is about the same if you kind of look at it that way. Current stock market is down. It was actually way down today. It was down as much as 250 points. Since then, it's kind of pulled back a little bit. As of this recording, we were about 185, 189 range on this as we're doing this right now. And a lot of it had to do with these other news here with the strength of the dollar. Dollar right now is about $1.07 to 1 euro, 121 yen. $1 equals 121 yen. So it's really kind of strengthening itself over a lot of our counterparts around the globe here. And then there's been kind of a bit of a sell-off overseas today as well. There's still, the deal with the situation with Greece and European community. And then also just kind of reiterates the fact that the Fed most likely will be raising rates at some point this year. So they're kind of getting into that belief, and there's concern as to is it too soon? You're always not worried about anything that's new. Is it going to be too soon? Or are we going to go into a tailspin, or stuff like that? Is it or is it going to be a good thing that the Fed raised rates? So there's those initial concerns. But as a result, the stock market's down, the bond market's taking off. So a lot of that money goes into the bond market. The good thing about where things are at with the European community is, there's they've kind of devalued more and more of their bonds. So as a result, we have a huge discrepancy in the yields that are being presented. So the Deutsche Bond is way down like 0.18%, and we're just over 2%. So there's almost a 2% difference. And what that makes is that Germany, their Bundesbond, and Americans' debt here have been really one of the primo debt out there that investors like to buy in because it's very safe. And with that discrepancy between the two yields, obviously they're going to go to the U.S. and buying the U.S. So that can help us keep our rates down a little bit further going long term. Today we're up a bit, so we're having an improvement in our rates compared from where we left off yesterday. So that's a nice little sign. We may have a little bumps and bruises along the way where we may pull back a little bit before we go upwards, but we're on a sign to probably have some more improvements in our rates going forward a little bit. All right, you folks have a great day. Thanks for watching, and we'll catch you guys tomorrow.